as always, you do make us smarter on Fed policy. So when you look at the volatility that we had last week, first of all, what's the chance that to kind of away from, the VIX index, away from equities, this starts infecting the credit markets?
It is always a risk, and it will to some extent. But the credit market is sort of, as Tom said, is a bit of sort of the stable cousin of the equity market. So I think a little bit of concern there, but not too much, really.
Okay, what does it mean for Fed policy? Does the Fed look at the market from last week and think we need to keep a closer eye on it? It was actually quite amazing to see that volatility started on the day that Jay Powell took over.
Yeah, I mean, bad luck for him in a sense. I think Bill Dudley and Bullard have already given us the answer to this. At least as on present data, they said the path is already in place. We are not hesitant. Bullard said this is just a minor correction. Bill Dudley, I think, called it small potatoes. So he's sort of saying there's no real issue here. I thought last week we got a little bit of a disconnect between what the Fed told us, which is normalization is still going on, and the market started to price down the short end of the curve, suggesting that they may worry a little bit of a slowdown in the market. Now, today is changing again, of course. But, central banks are not and should not be worried about weekly moves in markets. So I think for now, at least, if this is a technical thing, as we think and hope it is, then I think the Fed is on track for their 3 hikes.